Hello students, myself is Parminder Singh from Prab Kirpa classes. Our today's topic is your financial partners defining commercial banks and their services. After going through this course, the students will understand what is the meaning of commercial banks. Though we go to banks daily and avail their services, we deposit our money with them and we may have taken some type of education loan or vehicle loan or personal loan from the banks. But here we will go into detail what is the meaning of commercial banks? How do they earn profit? How is the safety of depositors' funds parked with commercial bank insured? How the commercial banks play a crucial role in the modern economy. We go to bank and deposit our money with the banks. Now the students will understand what are the two main types of deposits, that is time deposit and demand deposit. What is the difference between the two? That is, what is the difference between demand deposit and time deposit? The students will also understand what are the two types of demand deposits, what are the two types of time deposits. The students will also understand whether saving account, recurring or fixed deposit, which is most liquid, that is from where we can easily withdraw our money without any hitch or without any penalty or reduction of interest. The students will also understand who opens the current account, that is, for whom the current account is more relevant. The students will also understand what is the minimum deposit amount for a recurring deposit account. The students will also understand who supervises the banking and financial sector in a country. You might be knowing that in India, Reserve Bank of India overall supervises the functioning of all banking and non-banking financial institutions in India. The students will also understand the difference between public sector banks and private sector banks. The students will also understand whether the central government holds all the shares of a regional rural bank, or what is the shareholding pattern in a regional rural bank, what is the meaning of a cooperative bank or a specialized bank, why the small finance banks have been established, what is the purpose of the same, whether the payment banks which are of recent origin in India can accept deposits from the public, whether they can give loans to the public. The students will also understand the meaning of bad bank. The students will understand that government of India is taking steps to set up bad bank. Why the bad bank is being established and what is the purpose of bad bank. The students will understand the various functions which are performed by the commercial banks. The students will also understand that we go to bank and deposit our money with them. Why do we go to bank? Why do we deposit our money with the banks? Why banks overdraft facility to their customers? What is the meaning of escrow services which are being provided by the banks? And why commercial banks participate in loan syndication? Overall, this course is going to be very informative and useful for you, and you will understand the working of the commercial banks, functions and types of commercial banks in a very easy and simple language. Now the topic before us is, what are commercial banks? Most of us have our saving account with one or other commercial bank. We go to the bank and deposit our money with them. If we are having saving account, then we earn some interest on the same. If we are having a recurring deposit account where we deposit some fixed amount every month, there the interest is somewhat more than the saving account. If we are having fixed deposit account where a lump sum amount is deposited with the bank for a fixed period, there the amount, interest is somewhat more as compared to saving account and recurring deposit. If we are a shopkeeper or a businessman, or ours is an organization, then we may be having current account with the commercial bank where we do not earn any interest. Rather, the banks may charge some service charges from us. So now the question arises, what is the commercial bank? A commercial bank is a financial institution which accepts deposits from the public and gives loans for the purpose of consumption and investment. Today, public deposits their money with the banks. Banks have employed a large number of people. They have to pay electricity bills. They are having a large number of staff where and they have to incur management expenses. They have to technologically upgrade their infrastructure. So they do not keep all the money which we deposit with the banks with them. They further give that money on loan. Though all the money which they receive from us is not given as loan to the borrowers, there are certain guidelines of this central bank in each country where they have to keep some amount of the deposits as reserve and the balance they can give on loan. We will discuss how they are in a position to give loan, how the money is created by commercial banks under the course in a separate course, fractional reserve banking, where we will go in detail how the banks are in a position to give loans to large number of borrowers when the initial deposit is only small. So when we deposit our amount with the banks give that amount to borrowers. The interest which the banks gives to us on our deposits is less. However, the interest which the bank charges from the borrowers is somewhat more, and the difference between the two is the profit of the commercial bank. If we look back 25 or 30 years ago at the banks, then for each and every minor work, we used to go to banks such as updation of our passbook, sending of certain amount to some other person, payment of telephone bills, or some other purposes. But now there is a lot of advancement in technology. Now we are having online banking facility. We can transfer payment to our relatives, friends by sitting at our home when we are having internet connection and facility of internet banking. We can make payment of bills. We can do online shopping from Amazon, Flipkart, or other online sites. We need not to go to bank for all the works. Most of the works we can do, most of the banking works now we can do by sitting at the comfort of our home. Earlier, the banks had to open branches at different places so that they can serve the maximum public and earn maximum profit. Now, as online banking facility has been provided by the banks and new technology is coming into the field of commercial banks. Now the banks need not open branches at different places. In this way, the banks are also saving a lot, as they do not have to incur expenses on electricity, on opening of a new branch. They do not have to pay rent. They do not have to employ more and more staff. In most of the countries, commercial banks have to obey certain rules and regulations. These rules and regulations are framed by central bank in most of the countries. Why these rules and regulations are there, which the commercial banks have to obey? These rules and regulations are there so that the funds which the customers have deposited with the commercial banks are saved and there is stability of the banking system. As already told, if we say deposit rupees 100 with the bank cannot give whole of the amount of 100 rupees as loan to borrower. They have to keep certain amount as reserves. Why this reserve is kept by the banks? Suppose if you have deposited 100 and the bank gives away rupees 100 as loan to other borrower, and if you now come to the bank next day and want your money back, from where the bank will be able to give? So that is the purpose of reserves, so that the banks can be in a position to make the payment of demanded money back which you have demanded from the bank. It is not that banks have to keep the maximum amount as reserves. Central bank normally fixes the reserve ratio. If there are 100 customers, then in respect of each and every customer, say 10% is kept as reserves. And in this way, a big amount has been kept as reserve and which can be used by the commercial banks to pay to the customers if they come to the bank for withdrawal of their money, whether it is fixed deposit or saving deposit or current account. Commercial banks are playing a crucial role in the modern economy. How? They serve as intermediary between the depositor and the borrower. And commercial banks offer a variety of financial products and services. In this way, the banks are playing a very important role in the modern economy. When you will later on understand the functions of the commercial banks, you will really come to know that the role of the commercial banks in the modern economy is very important. Now the topic before us is your money, your choice, understanding demand and time deposits. We go to the bank and deposit our money with the banks. Now the question arises, why do we deposit our money with the banks? We may be earning some interest on our deposits if we keep it with the banks. Otherwise, also, if we are having our money in the form of physical notes or coins, then there are also the chances of theft. So it is proper for us to keep only few money with us at our house and deposit the balance with the banks. Broadly, the banks offer two types of deposits. One is demand deposits and the other is time deposits. Now we will understand what is the difference between demand deposits and time deposits. Each of these deposits has its own features and we should choose the deposit where we should park our funds on the basis of our requirements. First, we will discuss demand deposits. As the name suggests, demand. When we demand, the bank will return the money back to us. We have deposited the money with the bank, and if we need the amount now, we will go to the bank and will ask for back of the paying back the amount which we have deposited with the bank. These are demand deposits. So what is written? Demand deposits are those that can be withdrawn at any time without notice or with minimal notice depending on the bank's policies and the type of account, because there are large number of commercial banks in each and every country. There may be some minor difference in the type of accounts or the term and conditions of the accounts. Broadly, the demand deposits are of two types: saving account and current account. Suppose we go to the bank and we have, say, deposited $1 million with the bank, and we go to the bank and say that pay me in cash. Now the bank will immediately pay you if you are having saving or current account. But it may be possible that they may not be having cash at the relevant time. They will ask for some time, 30 minutes, 1 hour, so that they can arrange funds. So these are the demand deposits where you can withdraw your money at any time without notice or with minimal notice. So now, first of all, saving account. Saving account is meant for individual customers. If we are a shopkeeper or a businessman where we have to deposit our amount with the bank off and on many times in a day or withdraw money many times in a day, then saving account is not for them. It is for individual customers where there may be some restriction on the number of transactions in a month. When we deposit our money with this bank in our saving account, we earn some interest on our deposit. The interest which we earn on the saving account is less as compared to fixed deposit or recurring deposit. Saving account is very liquid. Liquid means we can withdraw our money at any time without notice. Next is current account. Current account is primarily meant for businessmen. If we are a proprietor or a partnership firm, or we are running a trust, or there is an association of persons, or there is a public or private company, or big or small organizations, all these types of organizations or firms have to open current account with the bank. Why? Because there is no restriction on the number of transactions which they can do on any day with the bank. That is, they can go to the bank any number of times in a day to withdraw or deposit money. Generally, no interest is paid by the bank in respect of the amount which is lying in the current account. Rather, the banks may charge some service charges from the customer for the maintenance of the current accounts. Next is time deposits. As the name suggests, here the money is parked with the banks for some specified period. Time deposits are also known as term deposits or certificate of deposit. Time deposits are those that are locked in for a certain period of time. In the case of demand deposits, we were in a position to withdraw our money at any time without notice or with a minimal notice to the bank. But in the case of time deposits, we park our funds with the bank for a specified period, which we opt at the opening of the account. The interest which we earn from the bank on our deposits is somewhat higher as compared to demand deposits. We can broadly classify our time deposits into two types. First is recurring deposit and the other is fixed deposit. First, we will understand recurring deposit. As the name suggests, recurring means reoccurring. Reoccurring, recurring in the recurring deposits means that we have to deposit some fixed amount each month for a specified period. It may be possible that we deposit $100 per month for say 1 year. So far as Indian banking system is concerned, the minimum period for a recurring deposit is 6 months, and the maximum period for which an RD account, recurring deposit account, can be opened is 10 years. That is, if we opt for $100 per month, maximum we can operate our account or we can deposit this amount per month maximum for 10 years. After that, your account will be closed and you will be paid whatever you have earned or whatever you have deposited. Your principal amount plus your interest will be given back to you. Now the question arises, what is the minimum amount which a customer can deposit in his recurring deposit? That is, what is the minimum amount which we can opt while opening a recurring deposit? Whether there is any limit, it varies from bank to bank. Naturally, the private banks are established with the main motive of earning profit. So naturally, private banks, in the case of private banks, the minimum deposit amount in respect of recurring deposit is somewhat on the higher side. And in the case of public sector banks, where the main motive is welfare of the general public and not to earn maximum profit, is on the low side. That is, in the case of public sector banks, the minimum amount for which a recurring deposit account can be opened is somewhat on the lower side. We take for example, in the case of State Bank of India, we can deposit rupees 100 per month in a recurring deposit account, minimum amount. And in the case of, we take another example, in the case of HDFC Bank, minimum amount which can be deposited in our recurring deposit is 1000 rupees. The main purpose of an opening a recurring deposit amount is to save money on a regular basis. Why we deposit money on a regular basis? Sometime we may have a long-term goal. That is, we may have to incur expenses on the higher education of our child. Then we start thinking in advance, 5 or 10 years in advance, that we will require money after 5 or 10 years. Then we should start depositing some fixed amount every month. It may be possible that we are having a dream to purchase our house. Say after 5 or 10 years, we will start depositing some money every month in the shape of recurring deposit, or we may have to incur expenses on the marriage of our child, say after 10 or 15 years. Even in that case, we may think of opening of our a recurring deposit in some bank. Next is fixed deposit. It is also a type of time deposit. As the name suggests, here a lump sum amount is deposited in the bank. Say we deposited $1000 in the bank, one time a deposit. We deposit it for say 2 years. Now the question arises whether we can withdraw money from recurring deposit or fixed deposit if the circumstances come that we have to meet some emergency expenses. There is a health issue in the family and we have deposited money in recurring deposit, or we have having an FD with the bank fixed deposit. Yes, you can withdraw your money even in the case of recurring and fixed deposit, but in the case of both, whether it is recurring or fixed deposit, the bank will charge a penalty from you. Though it is the normal procedure, over the terms and condition may vary from bank to bank. However, they will charge penalty from you, or they may reduce the interest which is lying into your credit, and they may close the recurring deposit or fixed deposit account and pay you the interest as the system will calculate, computer system will calculate, because all the terms and conditions are already fed into the computer system. In the case of Indian banking system, the minimum period for a fixed deposit is 7 days. Here you can see that a certain amount is put in. This amount earns interest at a fixed rate of interest. Here, if we say deposit $1000 and the banks are giving say 7% interest per annum, and suppose after a few days the rate of interest increases or decreases, but the banks will give you only this amount, though the interest may decrease to 6.5 or increase to 7.5 after a few days. The banks will neither decrease nor increase the interest on your fixed deposit. They will pay you the interest as already promised by them. Interest is earned till the date of maturity And when your account has matured, say you have deposited your money for 2 years, and after the completion of 2 years, whatever amount which you had deposited and the interest which has been earned by you, the total of both will be given back to you. The maximum period for a fixed deposit account is normally 10 years. The interest which we earn on the fixed deposit is somewhat more as compared to saving accounts, because here the money is locked in for a certain period of time. We cannot withdraw it on demand. If we withdraw it, the bank will reduce the interest or charge penalty. Minimum amount for a FDI account is generally rupees 1000. Now the topic before us is public, private and cooperative, understanding the key types of banks in India. In India, there are different types of banks which are working, and they provide services to general public, businessmen, agriculture, etc. There are various types of banks which operate in our country to meet the financial requirements of different categories of people engaged in business, agriculture, profession, etc. Now, from this picture, you can see that there are different types of banks which are working in India. Above all, there is central bank. That it does not directly deal with the general public. It is the main bank which supervises the working of all other types of banks. It forms the broad guidelines which other types of banks have to follow. There, the other types of banks are commercial banks. Commercial banks are further of four types: public sector, private sector, regional rural bank, foreign banks. Then there are cooperative banks, specialized banks, small finance banks, and payment banks. We will have an overview of each of these one by one. First is central bank. In each and every country, there is a central bank to regulate the banking and financial sector of that country. In India, we have Reserve Bank of India, which supervises the working of the banking and financial system in our country. Reserve Bank of India, or the central bank, manages the country's foreign exchange reserves. There is only one central bank in the country. We should not confuse central bank, that is RBI, with Central Bank of India. Central Bank of India is a commercial bank. Here we are talking about only central bank. This bank does not deal with the general public. We cannot go to Reserve Bank and deposit our money with them. Only the commercial banks can, or the banks can deal with the Reserve Bank. It advances money to other banks when needed. We will also later on understand how the central bank or Reserve Bank of India is known as the last resort of the banks. Now, commercial banks. These are the financial institutions which serve as the backbone of the modern banking system. Why they are called the backbone? Because commercial banks provide a large number of services to the customers. The customers may be individuals, businessmen, organizations, laborers. How do they provide services? By way of deposit accounts. You may be having some money with them. You cannot keep all your money at your home. You go to the bank and deposit your money with them in the shape of deposit accounts. If you require money for your buying a car, for buying a housing, buying a house, for setting up an industry, for setting up a small level shop, for small scale industry, medium size industry, you can approach to commercial bank for a loan. Banks also provide the service of in electronic fund transfer. Now, gone are the days when for making payment you have to travel a long distance to make payment by hand to the other customer in the form of physical notes or currency. Now you can go to bank and ask the bank to transfer money in the account of some other person whose account is say 1000 kilometers away in some other bank. Generally, the commercial banks are profit-oriented entities. As you know, that commercial banks are having a offices in many cities throughout the country. They may be having thousands of persons as their employees. They have set up a huge infrastructure. They are spending a lot of money on technological upgradation every year. They have to incur expenses on marketing, advertisement, or other expenses. So they have to earn profit. In the case of public sector banks, the profit may be small, but in the case of private banks, profit motive is more. The services of the commercial banks are very important for the functioning of an economy. If we see a large number of organizations go through their balance sheets or and other account financial records of the big organizations, you will find that they have taken loans from the banks to run their operations. So if the banks do not provide loans, all these industries which we see today cannot perform. There will not be any economic development in any country. In India, the commercial banks are governed by Banking Regulation Act 1949 on the basis of ownership. Who is the owner of commercial banks? We can broadly divide commercial banks into four types: public sector banks, private sector banks, regional rural banks, and foreign banks. Now we will have an overview of each of these four types. First is public sector banks. These banks are those banks where majority stake is held by the government of India. Majority stake means they are the government of India is having say more than 51% shares with them. They are having the full powers to run these banks through Ministry of Finance. Most of the public sector banks are already listed in the stock exchanges of India. Public sector banks typically have a strong focus on providing affordable banking services to a broad section of population. As already discussed, in the case of private banks, their main motive is to earn maximum profit. If you are having an account with a private bank, you will see that the service charges are higher. They may be charged some money from the customer for each and every type of services, and that services charges are also on the higher side. But in the case of public sector banks, their main profit is to provide banking services to maximum population, and that too at minimum charges. Their main profit is not to earn profit. Now, private sector banks. The private sector banks are the financial institutions which are privately owned and operated by private individuals or corporations. These are few private sector banks such as HDFC, Kotak Bank, ICICI Bank, IDFC First Bank, Yes Bank, and many more. They are profit driven. Their main motive is to earn profit in one way or the other. But one thing is certain, that these private banks have spent a lot of money on the technology. They are known for their efficiency and innovation. Now, regional rural banks. Regional rural banks are a specific category of banks which have been established in India, provide banking and financial services to rural and semi-urban areas. Who is the owner of regional rural banks? These banks are typically sponsored by a nationalized bank, the respective state government, and the central government. It means that if a particular bank, if a regional bank is situated in a particular state, some nationalized bank, central government, and that state government will have share. Each of these will be having some share. How much share they will have? Central government holds 50% share in regional rural bank. The concerned state government in which that regional rural bank is established has 15% share in regional rural bank, and the bank which has sponsored the regional rural bank has 35% share in the regional rural bank. So now comes the foreign banks. Foreign banks means those banks which are having their headquarters in some other country and are having their operations in many other country, including ours, that is India. These are the names of few banks: Standard Chartered, Bank of America, HSBC, which are having their headquarters in London or in USA. There are the list of foreign banks in India is very large. These are a few names. Out of those, foreign banks are subject to regulatory and supervisory framework of the host country. It means that though the foreign banks work as per the guidelines of their parent headquarters, but overall they at the same time they have to follow the rules and regulations of the central bank of the country in which they operate. In if we talk about India, these foreign banks have also to comply with the rules and regulations of Reserve Bank of India. These foreign banks facilitate cross-border trade, investment, and financial transactions. Now, cooperative banks. Here is the list of some cooperative banks which are working in India: Saraswat Bank, SVC Cooperative Bank, and Abhyudaya Cooperative Bank. These banks are those financial institutions that operate on a cooperative basis, and the ownership and control of these banks is shared among the members. These banks are governed by the State Cooperatives Act, Cooperative Societies Act. Cooperative banks prioritize the financial needs and interests of the members. Cooperative banks also come in many forms, just like commercial banks. They come in various forms such as credit unions, rural cooperative banks, urban cooperative banks. Now, specialized banks, as the name suggests, these are those banks which have been established to provide services in some particular area, or to some specific type of industries or sectors. These are the financial institutions that focus on some specific niche areas or sectors within the banking and financial services industry. For example, development banks. Development banks such as IFCI, state financial corporations. These are the development banks which have been established to promote economic development in specific sectors or regions. Export Import Bank is also a specialized bank which facilitates international trade. Its main focus is to help the exporters. If we talk about SIDB, Small Industries Development Bank of India, its main purpose is to provide banking services to small scale industries. In the case of NABARD, National Agriculture Bank for Rural Development, their main purpose is to provide services to agricultural and rural sectors. Now, small finance banks. These are a different category of banks which are of recent origin in India. They are established to serve the unbanked and underbanked segments of the population, including small businesses and low income individuals. That is, their focus is on small businesses and low income individuals. Here we have given examples of AU Small Finance Bank, Equitas Small Finance Bank, and Ujjivan Small Finance Bank. Now comes payment banks. These types of banks are relatively a very recent origin in India. They can carry out most of the functions of the banks, but they cannot advance loans. They cannot do advancing of loans, and also they cannot issue credit cards. They can simply accept demand deposits, that is saving account and current accounts, but not time deposits. As already told, time deposits are of two types: fixed deposit and recurring. They cannot accept fixed deposit or recurring deposit. These types of banks rely heavily on digital and mobile technology to deliver their services. Here we have given some examples: Airtel Payments Bank, Fino Payments Bank, and Paytm Payments Bank. Bad bank. Government of India is taking steps to set up bad bank in India. Bad bank is that bank where we cannot go to deposit our money and they will issue us loan to some other or to some other persons. They will not deal with deposit or issuing of loans. They will deal with non-performing assets of the banks, that is NPAs. Government of India is in the process of setting up a bad bank in India, and that bad bank will be called National Asset Reconstruction Limited. Bad bank will not involve in lending or taking deposits like traditional banks. It will buy bad loans, that is NPAs, from the banks so that their balance sheet is clean. The categorization of banks can differ from country to country, and some banks may fit into multiple categories based on their operations and services. Now, the topic before us is from savings to loans, a close look at the core functions of commercial banks. As a layman, we know only 2-3 functions of the commercial banks. That is, we go to bank and deposit our money with them, and in case of requirement we can withdraw money from our banks. We also know that banks provide loans to the customers for buying houses, cars, vehicle loan, education loan, or setting up industries, etc. But banks do not provide only these 2-3 functions, that is accepting deposit or giving loans. They provide a lot of other services also. They have other functions to perform also. Now we will have an overview of various types of functions which the commercial banks have to perform. Commercial banks are the financial institutions that provide a wide range of services to their customers. The customers may be individuals, businessmen, other organizations, laborers, agriculturers. Their functions are many, and these functions can be categorized into several key areas. First is accepting deposits. Commercial banks accept various types of deposits from their customers. Why do we go to bank to deposit our money with them? We go to bank to deposit our money with them so that the thieves may not rob us of the same. In case of certain deposits such as saving deposits, fixed deposit, and recurring deposit, we also earn interest. And in the case of saving deposit and current account, we can withdraw our money at any time. So main function is commercial banks accept various types of deposits from the public, and these deposits can be saving deposit, recurring deposit, current deposit, and fixed deposit. Commercial banks do not keep the deposits of the public with them. They give that amount on loan to other customers. If they keep all their amount with them, how will they incur the expenditure which they may have to incur on renting of buildings? They may have to pay rents, they may have to pay salary of large number of employees, they will have to incur lot of expenses on the infrastructure. they will regularly have to upgrade their technology. So they keep some amount, that is reserve ratio, with them, and balance amount is given to other customers as loans. The loan is given at a higher rate of interest as compared to the interest which they pay on deposits. So the difference is profit. The banks give various types of loans, which can be home loan, business loan, vehicle loan, personal loan, and many more. The list is endless because new and new types of loans are being devised by the banks so that they can tap the maximum public. Overdraft facilities. Banks also provide overdraft facilities to their customers which are having current account with them, so that in case of need they can fulfill the demand of the customer for a short period. However, there are certain terms and conditions which the customers has to fulfill to be eligible for the overdraft facility. If we look at 20 or 30 years back, we if we were to give money to some other person, we would use physical notes or use checks to make payment. But now with the technological advancement, debit and credit cards have come into picture. Banks issue credit and debit cards. Credit card means that you are not having your own money. You are taking the money from bank as loan, in the form of loan. Whereas in the case of debit card, you are having money in your account and you can use the same. Now we can use debit card and credit card in the shopping malls for doing shopping or making payments of electricity bills or other types of bills. Banks also provide trade finance facility. They help in international trade by providing services like letter of credit, bank guarantee, export import finance. Banks also offer safe deposit boxes. If you have safe deposit boxes in any banks, you might have seen such type of boxes in the banks where each customer is allotted a particular box where they can keep their important documents or other important items such as jewelry or other things. The things are kept there for safekeeping. The banks also provide foreign exchange services to their customers, and the services are such as currency exchange, buying and selling foreign currency, and issuance of travelers checks. These types of foreign exchange services are essential for those persons or businesses which are involved in international trade and travel. If you are having a lot of wealth, that is, you are a high net worth individual, the banks also provide you investment and wealth management services. That is, they will guide you where you can invest your money, how you can manage your wealth. But one thing is certain, that these services are not for a normal people or poor people. These are for high net worth individuals. who are having lot of assets and money with them. Transfer of money. Banks provide the facility of transferring money from one account to another, from one bank to another through check, pay order, demand draft, electronic fund transfer, wire transfer, etc. Now comes financial advice and consultancy. Commercial banks also provide financial advice and consultancy services to their customers so that they can take proper decision with regard to their investment and finances. These services are more general and for a broader customer base. That is, this is not for a high net worth individuals. These are for normal customers. In these days, the banks have started the services of mutual funds, demat accounts, etc. and insurance facility. These types of services are also being now provided by the banks so that they can provide services to the large number of customers and earn maximum profit by venturing into different fields, related fields. Online and mobile banking. Gone are the days when we used to go to banks for each and every minor work. Now we can check our account balance. We can download our bank statement. We can make payment of our electricity bill. We can do online shopping with the help of online and mobile banking. Banks also provide escrow services. What is the meaning of that? Banks act as intermediaries in escrow arrangements, holding funds or assets until the specified conditions or terms of an agreement are met. You can clearly understand the same with the help of a picture, a diagram. Suppose there is a person who is a buyer who wants to purchase something from other person's seller, but both these two persons, buyer and seller, do not know each other. They do not trust each other. One may be sitting in one side of the country and other may be in other side of the country or in some other foreign country. So here both buyer and seller want to do trade. One person wants to sell and other wants to buy, but they do not know each other. So in that case, the buyer deposits the amount of the agreement. That is, if he wants to purchase, say, some particular item for, say, $1 million. So the buyer will pay $1 million to the banks, which will be placed in the escrow account, and the confirmation will be given by the bank to the seller that they have received the payment of $1 million, and the seller will send the goods to the buyer, and on receipt of the buyer the confirmation is there that the goods have been received and the payment will be released by the bank to the seller. So this is a type of intermediary which the bank performs. Naturally, the banks will charge a fees for such type of services. Loan syndication. It may happen that some organization may demand millions of dollars as loan, and a single bank, commercial bank, may not be interested to provide such a big loan to a single client because it will increase the chances of risk for a particular bank. Otherwise, also a single bank may not be in a position to provide such a big loan to a single client. So, in that case, many banks and financial institutions may come together to provide a big loan to a big customer who is demanding million or billion dollars as loans for a big project. Commercial banks provide a wide range of financial services to the businesses, individuals, and institutions. The functions performed by the commercial banks are very important for the overall functioning of the economy. Now, we cannot dream of working without the help of commercial banks. We are now making purchases online. We are making payments of bills online. We are transferring money to other persons or relatives online. So all this have been possible only because the commercial banks are providing us different types of services which have made our life much easy. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.